The next wave of AI is here, and it's bigger than what most investors are anticipating. AI is just getting started. And first, we had this massive build out of infrastructure with Nvidia's data centers, GPUs, all the things that go into the backbone of the AI models. And we see this explosion of then software, generation of AI, large language models, tools that changed productivity and brought in AI to our everyday life. Now, the next wave that we're in right now that I believe we're really focusing on is robotics. And from ideas to machines that work in the real world, that's where you see Nvidia pushing hard. And you also see a lot of AI brains for robots and these different robots that are humanoids that are being deployed by even China at price points that are like $5,000 to $6,000. And they've rolled out what they call physical AI. And this is like the next wave of AI. Now, predictive capabilities are one thing, and it's not just about the agility of the robots, it's about the fact that they're already working in warehouse shifts right now. And we're going to go over some of the companies that are in this third phase of AI and why robotics is going to be one of the most important drivers of the next decade. Now, unlocking 24/7 productivity is what robots do. And that's a whole new market and potentially a huge opportunity that you probably don't want to miss, which is why robotics are some stocks you're probably going to want to have a good idea of what's moving in that market. Now, speaking of AI tools, we're releasing a revolutionary new system tomorrow. If you want to join the first access list, it's the first link in the description. It's getting cool. We're adding some new technology into it that's going to blow your mind if you haven't used AI for your investing. Again, I would encourage you. It's the first link below. It's free to get on the first access list. So go have a look. Now, I want to really start it off here with today's first robotics play. We were looking at trading this Nvidia backed company called Serve Robotics. Serve Robotics works in these deliveries, and you can see it says, why deliver a 2 pound burrito in a 2 ton car? We saw that they were getting a lot of momentum around Uber Eats and Nvidia's backing. And I even saw them a few times here in LA as I'm visiting here in Southern California from Northern California. And there is a lot of robots there delivering food. So we liked that their cash on hand was pretty high. They were starting to see their total assets rise up there to about $250 million, which is pretty good. And then they also see that net income negative still, but really looking to improve that as they're still kind of in the startup phases. So we ended up trading them this morning. We traded Serve Robotics in a market buy, 430 shares right there around $11, sold around 11.50. Was able to lock in about $350 profit on a $4,000 investment. So it was a nice trade this morning. So basically, when it came to Serve, we kind of bought when it was already running up here. And we looked for, even though it was up high around 7 or 8% when we were looking at it this morning, we purchased it anyway, but we just had a really clear plan. We went in with this plan for about $350 profits and simply executed it with our stop loss kind of in place. We were monitoring it and ended up having a nice day up to that $12 price point that we were looking for, which was about a what was it? It was about a 10% or an 8% trade, which was great for one day. Now, after that, though, we saw Nvidia release their earnings today. They came in with their financial results here. And in their earnings, what we noticed was that their data center revenue wasn't as hot. So maybe that's not so good for some of the sentiment, which is why we see Nvidia kind of sell off, even though they came in with some really good earnings. But here's where it's going to get interesting, is kind of jumping into some of the robotics plays for what is, manufacturing, or I guess this e-commerce play, which is moving from what is the evolution of robotics? Well, making it so that humans don't have to do repetitive tasks. And when we look at Serve Robotics, for example, what are they doing? They're delivering food, something that's fairly repetitive. Years ago, when DoorDash first came out, I remember my wife and I were still figuring things out, and we had just gotten married, And in our spare time, we were doing DoorDash all the time, right? It was something that we could make some extra money. Figured out pretty quickly that it was going to get super saturated. So, and also we were just starting our business and things were starting to get a little bit better so we could make enough money. But, it's super repetitive. I know it is. And a lot of Uber drivers don't like Uber driving for the most part, unless, they have this like system that is very simple for them and it can make sense. But for the most part, it's not a very satisfying thing to do delivering food. So same thing is true for warehousing. And that's where Symbotic comes in. This is going to be SYM. And SYM is a company that is optimizing the robotics for Walmart, for Albertsons, and for Target. And so, how, like, right now, if you go to Albertsons, or let's say you go to Walmart, you're going to walk into the store and order. Well, a lot of times the evolution of this is that they're doing that they're ordering food. You can order their products and they'll ship them to your house. So now Walmart could survive the hits that get taken from the competition of Amazon or things like Mercado Libre in Latin America by having their warehouses converted into what are e-commerce. And so these are AI powered robots that work in the warehouses for Target and Walmart, and they handle all of the e-commerce, setting up basically the inventory and even moving things onto shipping containers or into the delivery vehicles for those products to get delivered. So they have forklifts that are AI powered. They have some other smaller vehicles that are sorting things in the warehouses, and they're using inventory with AI powered tech. Now they signed like about a $500 million deal recently with Walmart. And so that's where their market cap has been growing tremendously. They're making now per quarter about $600 million. And it was funny, just back here in 2024, it was the first time they had a $500 million quarter. And we're saying, hey, this is a robotics company that could really be promising. Look at that gradual increase we're seeing on revenue, now getting up to about 1.7 billion in 2024. And then in 2025, they're on track to do over $2 billion in revenue. Then you look at the balance sheet, looks pretty good. Their assets are up above their liabilities, up about 21%, while their liabilities are only up about 19%, which indicates some good discipline there. So when it comes to their chart, they are recently pulling back, but they're making runs to all-time highs. And we've seen this level a few times where they're starting to push up, and there's maybe some support levels that they're going to reach if they're going to try and make this recovery. Kind of see these levels here. Let's take a look at what the chart looks like. So they were consolidating left to right, trying to keep an uptrend. They kind of broke pattern, sold down to this level. It's kind of a previous support around $42 a share. I think we even have a resistance if we move that one out, maybe over here. Yep. Previous resistance acting as a support level. So they're trying to basically bounce this level, make their run back up into these previous highs, up into about $55 a share. Now, if they're able to not make previous all-time highs, but essentially get back up into these levels that they were previously facing their resistance level at $56 a share, well, they're at 47 now. So that would be about an 18% increase. If they're able to continue that trend, kind of right now they're consolidating, but overall they're building this market cap. The interesting part was, months ago, we saw them kind of consolidating here down at this level from left to right. And we were watching them swing through basically into 2025, and then made this breakout into all-time highs, I believe it was, or near all-time highs to that resistance level of all-time highs at about $64 a share, $65 a share. So you have that previous resistance, all-time highs at 65. They are bouncing this previous resistance as well, which oftentimes will act as a support at $42, and they're looking to get up into $56. So I like the play. It's a good longer term robotics company, and they're still establishing themselves as a go-to player for companies like Walmart and Target. And if you think about it, Walmart or Target need these companies. That's why they're paying so much money to Symbotic here for those robotics. Because think about it, it's like let's say you have what's a technology that totally disrupted an industry, and now all of those things are no longer things people use. You could say something like I don't know, a drive-in movie theater. I mean, they still exist, but they're harder to find nowadays where you can drive in and watch a movie. It's harder to find nowadays. There's maybe some community exceptions, but what made it hard for the drive-in movie theaters? Well, it was Netflix. Like, even movie theaters are having a harder time now, and there's these big buildings. Or Amazon really affected the malls in the world. Like, malls have a harder time generating revenue nowadays because of Amazon deliveries. And so the same thing is true for like grocery stores and things like Walmart. These are big warehouses that are optimized for people to come in and shop. And so kind of what they're doing is they're adding more warehouse space to the back, or they're shrinking the store a little bit, and they're doing more of the e-commerce side out of the warehouse, where these robots are essentially doing the heavy lifting, and they're automating those pallets, those product loadings into the trucks or into the delivery carriers. And that's the beauty of Walmart partnering with them, is that they're looking at that change in consumer behavior, and they're saying, all right, we got to get ahead of it. Target's saying we got to get ahead of it. They don't have the technology built out, so they're going with Symbotic, this company that's seeing to not just build robotics, but build AI powered inventory, which would really tie well into a company like Amazon. Like, Amazon does that very well, and they're kind of taking that straight to the department stores. So that's really what we're seeing with Symbotic stock, and we're going to see how they can, kind of hold this level. They're a nice robotics company to be watching at the moment, and we'll definitely be keeping a close eye on them here into the end of this summer. So what are you guys doing? How's everybody doing on this Wednesday afternoon? Everybody doing okay? Go ahead, comment in the chat. What ticker symbols are you looking at right now? Maybe related to robotics, as that would be cool. But if not, we could start to expand out a little bit. How's everybody doing today? All right. So we got Tigritty is in here. You see Dylan is in here. Mindshift's in here. You were looking for a breakdown on C3.ai. I haven't covered that one much, but we could take a look at it. Let's see. Kush, thanks for tuning in. You got Al Domingo is here from Saskatoon. Oh wow, never heard of that. Kevin Ackerbid, maybe we'll grab lunch here. Appreciate you, Kevin. Well, thanks for the warm welcome to LA here. Draco says, can you show your positions? Yeah, I mean, I have a lot of positions. Primarily, I'm in quantum. I'm in what are we in? We're in Nvidia. We're in AMD is one of my biggest positions that I have in my Schwab portfolio. CTM stock is a company that I invest in pretty heavily. I also have some index funds. Primarily, I'm invested into my business as well. So, we have a software company where we, I have employees, our team basically, they kind of tell me what to do. But, we have like Mercatus, which we're building out, which is our AI predictive analysis software you can see here that actually can get us in this case, we're using OpenAI. So a lot of our income and things like that, I'll put back into our business, making the experience better for Stockmate members, improving our company and things like that. But, I invest about 40 to 50% of my money into the stock market, primarily in AI, space tech, and quantum. And yeah, so that's kind of the focus for how we diversify. I also have a focus on real estate as well, where we do some renovations that we're doing right now, which has been really cool. So yeah, I mean, we got a few ticker symbols. Let's take a look. One of the top recommendations has been from C3.ai. So let's take a look at what's going on over there. I haven't covered this stock in a very long time. C3.ai. Let's take a look. All right, so they're sold off. We were never bullish on this company. Last time we covered it, we were actually bearish. We were looking for a sell down here from $27 to about $16 a share. So for Mindshift or Sandesh tuning in here, when it comes to C3.ai, it's not necessarily a company I would recommend, but we could see if anything's changed. Thanks for the recommendation. Let's take a look here. So the first one is, we see the sell down continue from $27 that we were anticipating, 39% sell down here to about $17, and now they're down at the support. They're down at a support level that they've had pretty consistently for the last few months, back to 2023 actually. And so they sold down. I guess you could say that if there was a time to technically buy, it would be around this time and looking for a recovery there of about, 50%. But I personally, I don't think I would buy this stock because they've had a lot of manipulation in the past. And we could take a look at their financials and stuff, but in my experience, there wasn't anything that was like standing out. They got a $2.3 billion valuation. They're bringing in revenues of about $100 million a quarter, which actually is a lot better than when we first started covering them. So they have improved a little bit there. Net income's up or down 9%, while their revenue's up 25%. And actually, they got about $1 billion in assets right now, which is doing pretty well. Annually, it seems like they have declined a little bit since 2021. But they have $1 billion in assets with $100 million a quarter, so about 1.4 or 1.5 billion per year. So fair value, market cap's at 2.3 billion. I mean, relatively, with the exception of maybe some hype around AI, they're most likely going to be valued somewhere between that $1 to $2 billion mark. Right now, they're at $2.3 billion, which is a little bit higher than what we would expect. A good rule of thumb that I'll use is Benjamin Graham. When it comes to just fair values, he uses the assets plus the revenue to really get a good idea. However, we could see some growth in AI right now. Let's take a look at what it looks like on their website and see if they have any new developments, because their revenue actually is sustaining pretty well. C3.ai, enterprise AI. They even have a large, I don't know if it's a large language model. I think it's more of a chat bot. If I say, is this AI? Let's see if it is. Okay, is this an AI I'm talking to? Yes, you're interacting with the AI system. Okay, it actually is an AI. C3 AI Federal Forum 2025. Okay, C3 Agentic AI websites. So the only thing that I've seen is they haven't had any new contracts. We see Shell, which is great. U.S. Air Force is great. Enterprise Data Analytics Platform for AMI operations and AMI operations. They've had actually a lot of momentum in their financials recently, which is great. From industry's perspective, they're in almost every industry. The customers they serve include Shell, Air Force, Baker Hughes, Con Edison. Looks like the Department of Defense. Okay, so they're actually in government, which is a good spot for them to be in. And yeah, actually, they don't look too bad. There was a few things that were a little bit seeming like a red flag, but ended up kind of smoothing over throughout time. One of them was a Microsoft Azure partnership that was a specific partnership with Microsoft. That was an announcement they had on their press releases that we found as a regular business owner or just human being. It was pretty easy to get that certification that they had announced on their website. So it's kind of weird that they placed a lot of weight or did a whole press article on it. But other than that, we see them actually hold their revenue and continue to grow. With $100 million a quarter, they're obviously demonstrating that their value is there to the marketplace. So, maybe they're actually looking more like a buy. They've sold down. RSI MACD is looking like a buy, at least on the RSI. They're below the 30 mark. On the MACD, they're down here. So they're indicating more of a buy. Now, if we were to buy this company, let's say on a trade over the next few weeks or something like that, we'd look for a stop loss somewhere below this $15.50 range. That would be kind of a rough estimate of where it would be. If we're trading it kind of on the shorter term, we'd probably look for what would be more validation. Right now, it's still this green line here will act as a support or a resistance, that moving average, and it's been acting as a resistance. They've struggled to break above that moving average. So same thing with the EMA as they're kind of consolidating here on the support level. So what we'd look for is for them to kind of validate this support more, potentially push up into this level around $18, or even looks like they double bounced here a little bit, which is good. And yeah, the margins right now up here into this $18 range is 10%. If they were to make it up into $26 a share, then that would be a 57% increase. So from a valuation standpoint, they're at a good spot right now. But from a why they would make that move is most likely just market sentiment, really liking what's happening with AI and looking for that. But as we mentioned, Nvidia pulling back a little bit after hours. We'll see how investor sentiment kicks in. If we don't see that, this is what we got to realize. While the market looks overbought and things look way up and it looks like super over bullish, the important thing to realize is that if these companies are bringing value to the world and they're growing, right now is a time when these companies, we've never had so many companies bringing such a large amount of value to the world. So it's just something to consider that, while it's at a high, we're in a golden age. This is technology that we've never seen before, and it's really changing the world. And there's a reason these companies are trading at the multiples or getting to the levels that they're at. So yeah, can't really count them off. Can't count them out, I should say. All right, so we got Tanet is here. Hey, Tanet. Good to see you. Dennis, good to see you. Appreciate it. Jay Fremix says, let's get pumpy, everyone. No pump and dumps here, man. We don't do pump and dumps here. Nope, we're not about it. Try and keep it as fundamentally sound as we can. Tyler says, hey, Will, can you please explore BBAI on the shipping aspect of their business? I think the Panama Canal contracts via BlackRock connection, also shipbuilding. Sure thing, Tyler. I actually really like that idea. So one of the things that people might not realize about BigBear, when we look at their recent developments, just around the time when there was conflict over in the Suez Canal, where there was pirates and you saw them trying to take out some almost sunk a U.S. Navy ship, and you had them going way around and not being able to do shipping. And there was some tensions around the supply chain with things like oil or food or things like that out there near the Mediterranean. And, one of the things was, okay, what's going on over there? Because this was when Chinese tensions were heavy, right around when tariffs hit really hard and the market was correcting big back earlier this year. The question was, what's going on with the Panama Canal? And basically, BlackRock came in. And as you know, the Panama Canal, if you don't know, we have a deal with Panama because we helped them out in the past and helped them build the Panama Canal. So we got a really good relationship with Panama. They tie their currency to the US dollar. We got some good things going with them. And we helped build that thing so long as we have the advantage of running our trade through the Panama Canal and everything else. But we kind of lost some power to China, and China started sending people in, having shipping a supply chain set up there in Panama, and it was becoming an issue. And what happened was BlackRock came in with all the owners basically in Panama, and ended up buying some of the major ports in Panama to get back control of U.S. control now of the shipping. in Panama. And then you have the U.S. taking initiatives to hunker down on their security, hunker down on their surveillance over there, while they're in control. And that's where this comes out. So, when you look at let's take a look. Is it defense or travel and trade? I think it would be more related. Maybe it's related to trade here. I think it would be related to trade here. So essentially what they're doing is they let's see, shipyard AI, we're not in the right spot. Let's see. Solutions, is it computer vision? I got to find the spot. But basically, you see this ARCAS right here. So the ARCAS is able to see all of the ships in a harbor. They have these cameras that are set up, and Big Bear is working with, they've done some conferences with Panama. They've, if you go to the news over here and you look, they just launched this Narval Holding Corporation partnership with AI-powered cargo security management solution in Panama. So they're going over to Panama. They're setting up their ARCA AI, and what you have here is it's seeing all the ships, where they're coming from, where they're going, real-time alerts with millions of data points to enhance situational awareness and predictive forecasts with artificial intelligence and machine learning. Not only monitors past events, but also projects future trends, empowering leaders to make informed decisions. So they're setting up surveillance over in Panama. This is actually a really big deal because the data is going to be very valuable. It's going to be the type of data that the Department of Defense is going to want, the type of data that the Border Patrol is going to want, or that the travel and trade, or just the U.S. in general, is going to want to have an eye on. And so when you look at that technology with ARCAS, essentially what they're doing is they're eliminating the blind spots in the Panama Canal. And so when you go to the news, we've seen them come out with that partnership. A while back, we saw them working in a Panama. There was a Panama. There's the drone tech. No, it was related to. I want to say it was an event of some sort. Can't quite recall. Some sort of event that they went to where they were establishing connections over in Panama. I think it might have even been late last year. But yeah, so we see them do that. So the ARCA's monitoring and computer vision powered by AI over in the Panama Canal. I think it's actually a big key for what could be a Department of Defense place. And the most important thing is that doesn't dip too hard into their balance sheet, and they come in without negative net income as much, and they can kind of stabilize after this last quarter. And if they have their total assets continue to rise as they have every quarter in 2025 up to 600 million, if they continue to see that the assets increase and their liabilities still stay low as they have, then they'll be in a really good spot to continue to build out their company. But they've had a lot of changes. They've had a lot of things kind of come up. But ultimately, with those things paired with the airport security and maybe some Golden Dome space tech as well, we could see them being in that 5 to 10 billion, or even Leidos technology is up there in that 20 to 25 billion market cap on most days. So they're still undervalued in my eyes if those things pan out. But right now, on a fair value of where they are, it makes sense that they're selling down, and they are where they are around that $5 support right now. Awesome. So Mark's here. What's going on, Mark from Orlando? Steven, the bear. What's going on? Not the bear as in like bearish, but the guy that always comments a bear. Appreciate you, man. Nick says, howdy, Will. Thinking of dropping 100K into CTM, going long term, how do you think the future of the stock will grow? Well, Nick, if you're going very long term and you're considering 100K, I'd say that's fine if you got a couple million in the portfolio. If you're just dropping 100K and that's a pretty large portion of your portfolio, and you're planning on going for the long term, the more sensible approach would probably be to average a dollar cost average into a company like CTM, or even with 100K. I don't know what your diversification looks like, but they're a company that literally will go up when you get if you decide to invest in CTM with 100K. Their market cap's still at 80 million or something like that. So I have long-term positions personally in CTM. I'm holding, I don't know, 10,000 shares or something like that. So I hold CTM personally. I like the play. But as far as if you're going to drop 100K into it, yeah, I mean, it really just comes down to your goals, what you're trying to do. If you ever want to talk about it more, you can, shoot me a message on Instagram. There's a link down below. Or if you join us at Stock Meets, I talk with members quite often there. We can kind of go a little deeper for you. Sinbad says, "Hey, Will, I would like you to take a look at Soundhound if possible. Bought it at 12.53. Not a great trade. Greetings from Brazil." Sinbad, thanks for tuning in. Never been to Brazil, but my wife and I really want to go there at some point. It's on the list. All right, let's take a look. So Soundhound, how are they doing today? All right, not so bad given Nvidia had a sell-off. Soundhound is still doing okay. Last time we were looking at Soundhounds, we were trying to see if they'd bounce this level here. Let's take a look. There's a lot of drawings. Let's get rid of some of this stuff. They're in this trend right now. It's this slow and steady trend where they're actually potentially selling down to a conservative play would be $11. Doesn't mean that's where they're going to sell down to, but I think that's their pattern right now. They're kind of in this direction of maybe trying to push back up, but ultimately they still got some room to run down here, about 6% down into that $11 range. Now, they're trying to make a run back up in that $15 range, and that would be a resistance around $16 a share, which is from this 1186 price point would be about a 33% increase. So they have upside. They're actually kind of almost in robotics. You could almost say that. There's almost a robotic feel to some of the tech that they're working with. Soundhound actually has partnerships with a lot of companies that have their own technology. So a good example would be like, Hyundai, like they have their car, or Kia, they have their car, and they're putting the AI voice inside of these cars, Stellantis, Genesis, or Lucid. Same thing with the fast food or the restaurants they're working with, Chipotle, White Castle, or what have you, or Oracle Food and Beverage. They're working with companies on actually, being at the, it's kind of almost like a robot, right? It's like an ordering menu, and there's a voice that's AI, and you can, make your order of your food to AI. So that's one thing. And then they're working in the cars as well. And then also in the pharmaceutical industry, looks like they're working with their customers or their patients on experiences, maybe getting signed up or almost like a consultant as a nurse potentially. I don't really know what the key is there, what they're going for. But Soundhound has seen some growth, and I think the main thing we were watching with Soundhound was that they continue to get out of that position that they were in, similar to BigBear. And they looked like BigBear in December here. They had a negative net income, 250 million, but they had cash on hand, right? About 600 million, pretty similar to BigBear, right? They continue to reduce their debt, which they have with assets up there, and their revenue has been steadily increasing up to 42 million. The valuation of 4.86 billion is pretty it's pretty high right now to see that valuation. They're up there right now. So from this perspective of seeing them potentially sell back down into that $11, $10 range, I think that's a conservative approach, and that would make a lot of sense. And we'd look for them to potentially continue some of that trend. A stock has a greater chance of continuing in the direction that it's going than reversing. So right now it looks like it's kind of selling off, getting rejected, and potentially making its way down to that $10.50, $10 range, $11 range, before potentially continuing up in that direction. But overall, market cap looks good. It looks like it's up, multiples, 5 multiples from last year, and just conservatively trying to more align with their current valuation would make sense to see them sell down a little bit. All right, so you got Tyler says Trump is rebuilding our shipbuilding industry. Thought that's a good source of revenue in the future. Yeah, and that's actually what BigBear is doing as well. BigBear has technology that they put out there that is related to the manufacturing and supply chain. If you go over there, they have something related to building or manufacturing ships. See this? They have something called Shipyard AI in it. It's an AI software platform to help drive efficiency, lower costs, and mitigate risks, modeling and simulation, all that stuff. So pretty epic. Now, outside of that movement there and what we see in the markets with Soundhound and some of these other companies, there's a lot of great stuff happening. Okay, you're from Cali there. Appreciate you. Thanks for tuning in. I'm from Cali, Northern California. We're down in LA right now. Kevin says, how do you feel about leverage positions? I asked because I entered into leverage CoreWeave on Monday and you're up 10%. First of all, Kevin, congrats on being up 10%. When it comes to leveraged positions, the key is to have a plan. You know, a short-term plan. A lot of times leveraged positions, with the exception of maybe AMDL, I've traded long-term on the 2X, or maybe Rigetti, RGTX. I don't really trade long-term 2X positions because there's a decay and also the volatility. What happens with those positions is that when you get up, it can be good to hold that position. But if it's kind of consolidating and not really going the direction you want, or you start to get down, it's important to have a tight stop, because those positions can end up, you know, being a pretty large multiple negative if they don't go in the direction that you would want. So as long as you have a plan together, you got clear levels at where you're entering and where you're exiting, then I think it's, you know, kind of tie those not just from a winning perspective of and what you could afford to lose, but also, you know, tying them into potentially the supports and resistances as well. That usually is an approach we take when determining, you know, the exits, the entries and exits there. So Jzev says hello from NY. Awesome. Yeah, it's interesting. New York, I'm actually going to be there at some point. There's an event. It's if you guys want to join me, you can. I'm going to be there. It's Q plus AI in New York. It's a quantum conference, and I actually have a code for you guys. If you want to join this conference, you can actually get 15% off. And essentially what they do, it's going to go over quantum and AI. Some of the companies that are there, you got Rigetti is there, IonQ, or IBM is there, excuse me, Nvidia. You see the CEO of Rigetti will be there, Arkits. You definitely see Republic, I think Amazon and Nvidia's head of quantum was there, IonQ is there. So we're going to be there. There's also, they talk crypto as well. If you use the code, there's actually, I think if you want to join or join me in New York, I'd love to meet you. I'll be in New York October 19th to 21st for this quantum event. If you go enroll, or you get it, they have actually an early registration that ends today. It expires today. I didn't mention this to anybody until now, but it expires today. And you can get 15% off of the registration. It includes like all the sessions, quantum and crypto, breakfasts and lunches included. And I think there was something to mention of like a boat outing or something like that could be pretty cool. And of course we can meet as well. But if you use the code WRICH at checkout, then you can actually get 15% off of the Q plus A conference, the quantum and AI conference in New York. So it's just WRICH15 is the code. WRICH15. I don't have the chat open, but if you guys can, if someone can comment WRICH15 in the chat, so that, and that way people could see it. That would be cool. Awesome. Yeah, there it is. So you can go to Q plus AI and actually get that. If you want to join me, I would love to see you there. Yeah, Tristan said it perfect. WRICH15, 15% off. There you are. Awesome. Okay, Nick, thanks for tuning in. Appreciate you all. Yep, IonQ received that $5 million grant recently. That's an interesting one. Sandesh says, can you do one on Redwire? Sure, yeah, let's take a final look here at Redwire. So Redwire is a company that has a $9 price point right now. We saw them at the support level. We're looking for them to potentially reverse. Let's see how things are going. So they are at right now, RSI MACD indicating a buy here. And last we were looking at them, we were looking for this recovery here. It's kind of a support level, more or less, right in this range. And then you have them trying to bounce this support level. They recently signed a lot of contracts with the defense companies and NASA, and they have one of the 13 contractors they are for a $2.7 billion space initiative. And they're still a small market cap, I think. They're looking to make that 36% recovery now and potentially surge back up in that $20 range, which would be about a 10 to 50% increase, or a 100% increase up in that $19 range. Really watching this $8 price point. They've been trying to hold it pretty well. It's kind of consolidating right now. And the space tech industry is a great place to be watching right now. So that's kind of how it looks. Not anything crazy, kind of consolidating at the support level. And I think the financials indicated some growth there. But the last quarter, they came in with a negative net income, which we were hoping for them to improve. Let's see what it was. Yeah, negative net income last quarter. Annually, they're increasing their revenue. Balance sheets was not good in 2024, but they cleaned it up big time in June. This last quarter, they came in 1.5 billion in assets with liabilities at 400 million. So they have more assets than their market cap right now, which indicates that they could have some growth here in the near term. And they're at that support down there with 35% margin for profit. So we're kind of looking for Redwire right now. Probably be trading them at some point later this week. Great, guys. Well, hey, I appreciate you all. Thanks so much for tuning in. We did some good breakdowns of a lot of different AI companies and robotics companies. We went over Big Bear. We also posted a video on Big Bear earlier today. If you guys want that full breakdown, someone said, "What's the latest with BigBear.ai? Is there still hope left?" And that sounds pretty gloomy. Oh man, yeah, it's the market's gonna correct. It's gonna, AI today. Nvidia sold off after earnings, so everything kind of sold off a little bit today. Robinhood was down 5%, something like that. So it's part of the game. But hey, if you guys want to join us at Market Open, second link below. Don't forget to join that first access list for the machine. And if you want to see our reveal of our new tech that we're coming out with tomorrow, we have some new innovative AI-driven models for your analysis. It's going to be happening tomorrow. So if you want to actually be there, it's the first link in the description. It's free to join the first access list. So appreciate you all. Thanks so much for tuning in. Have a great rest of your nights. And if I earned your thumbs up, smash the like button. I'll see you guys in the next video. Take care.